Ken Kraetzer for CBSI Services, our Talking Business interview program. And we talk with leaders in the field of banking, insurance, customer service, digital marketing, and all to highlight the great work of our team taking care of our clients and their customers working at home through the pandemic. CBSI provides insurance-backed benefits and customer service management to the credit card and payments industry. Now, today we are so glad to have a chance to talk with someone who works in the banking field every day, and that is Jim Perry, a senior strategist with Market Insights, a company that specializes in the development of strategies to help community banks and credit unions grow, position their institutions for growth. Jim, good to see you. How's everything today?
Doing great, Ken. Thanks for having me. It's a pleasure to be here.
Our pleasure. Now, we've had a chance to talk with some of the community bankers. Our company works with probably close to 1,000 community banks and credit unions around the country, mostly on the credit card side. Tell us a little bit, just how's your year been in working with your clients and helping them adapt to conditions during the pandemic, and some of the ways they've been able to help their clients?
As we've talked, Ken, a lot of our work is about strategy development. It's about helping community banks and credit unions really take data about their consumers and about their markets and using that as a foundation to establish all types of strategies. It could be anything from their next, where they consolidate branches, where they do their marketing, where they do their branding. We're doing a lot now helping financial institutions figure out some of how they can keep the momentum going on their own digital transformation. So in the last year, the needs that they've been presenting to us when they contact us have really covered the gamut, because one of the things I tell a lot of my fellow consultants out in social media space is, please try to remember, while we're all working in the same industry, you have to sometimes remember that there are so many regional and local differences between institutions based on the size of the institution, the amount of competition in a particular area, and you can paint with some broad brushstrokes on a lot of really important issues, but at the end of the day, you've got to be able to get down into that, into the very specific needs of those institutions. One of the things that has happened for us, which I never imagined possible, was running an entire strategic planning session virtually. Being able to run a couple of days or even a full day of strategic planning with the board and with senior management through virtual means. You know, I think a lot of people are discovering it's not half bad.
Yeah, well, it's been a way to communicate that we've all had to learn how to adapt and put to good use. And some of this is going to continue going forward. It's going to save a little bit of travel on occasion. Nothing like going out to meet a client in person is so important. Now, one of the areas that I think community banks can take a lot of pride in is helping their small business customers last year with the Paycheck Protection Program loans, something that was announced by the White House and the Treasury on very short notice. It was installed in a matter of weeks, and the banks had to adapt to the procedures and the processing flow to help their customers. How did you see the banks handle that? It really was a proud time for, I thought, for the banking industry, being able to help so many small businesses.
Absolutely. You know, I'm sure you've heard so many people talk about the degree to which the pandemic pressed the accelerator on a lot of trends that were already underway. And the moment the PPP program was announced, of course, through, again, a lot of community-based institutions, the panic button was being hit because they realized they didn't have the infrastructure in place to be able to handle either the demand for it or certainly even having the platform in place that was going to allow them to easily process applications, things of that nature. One of the things that was disappointing, I think, was really, while we can be excited about the number of community-based institutions that were able to meet those needs, there were a lot more that weren't than I would have liked to have seen. I think, what, 40% of the smaller institutions were not able to participate in that program. And consequently, that sent a lot of their customers elsewhere. And that has contributed to a sense of churn, not only in the retail side of things, but certainly for small business customers. If you look at some of the recent data that's come out from like Ron Shevlin's group over at Cornerstone and others, they're really pointing to the fact that there's still a great likelihood in this year and in next year where we're going to see a lot of customer churn because of people's disappointment with how their financial institution dealt with the issue of PPP. Because even those who did finally have a successful kind of experience of the PPP loan program through their bank or credit union, it wasn't always easy. It wasn't always seamless, especially when you hold up what Square was able to do, as an example, that made it so incredibly seamless for a lot of small businesses. So I think it's important for banks and credit unions to remind themselves, look, we have to keep the pressure on ourselves because the bar's been set. And the people who are setting the bars are no longer financial institutions. What was it? Jamie Dimon from Chase, sure, in his shareholder letter, banks are playing an increasingly small role in financial services. Can you imagine being a shareholder hearing that from the head of one of the largest banks in the country? It's part of the reality of it. The consumer, whether you're a retail or a commercial customer, you're making more choices about your financial relationships based on the experience that's happening outside of financial services as we know it.
Well, what are the share areas that banks are losing that you point out? Obviously, credit cards. We were on the American Banker digital banking program a couple of weeks ago, and one of the executives talked about 31 from B of A, talking about 31 million mobile customers that they serve, which you've got to have a big technology platform to do. But then you have things like mortgages that are moving to places like Quicken.
Right.
And national advertising, that as a service that used to be kind of a local bank service. What are some of the other areas that you see where the banks are losing customer share on different services?
There was actually just an article a couple of days ago that was pointing to the loan loss that had happened in credit union space, as an example, auto loans and mortgages. Again, because of Quicken Loans, because of small business loans that are being offered through fintech competitors, it really is chipping away at the traditional banking relationships that people have enjoyed. And then, of course, when you look at how big tech is leaning into financial institutions, I don't know if you saw the story, what was it, 3 or 4 weeks ago, where Walgreens was going to lean in and look at the possibility of offering some financial product as a way to kind of hedge their own profit future. So more and more banking is being dismantled and reimagined in places that 10 years ago we never would have thought about.
Well, we just did a story last week on a San Diego-based company that is doing AI for fraud protection in the auto lending field, and looking at vast amount of data for just what you were saying, for loans that are being made remotely, where the buyer may not be ever go near a dealer, everything may be handled online. It's another area where artificial intelligence was said to be a really one of the areas of a solution in that field. Again, it's a technology. Where do you see some of the applications of artificial intelligence in banking today?
I was just listening to a couple of presentations on IBM's Think 2021 and heard the head of Salesforce talking about some of the challenges in financial services right now, and really encouraging banks and credit unions to continue to keep moving forward because of the degree to which consumers' expectations of us keep changing, right? As an example, I know some banks now are looking at not only being able to work with real estate companies and others to have a more seamless experience of getting a mortgage, but actually adding into their bank's mobile app the ability not only to do a mortgage application, but to actually find a house in your area or whatever area you're looking for, where the bank is offering the additional value added through their artificial intelligence programs that are now being incorporated into their platforms, so that someone can actually find the home they want in their banking app. I think people are really, the light has finally come on that, yes, everybody has checking accounts, everybody has savings accounts, everybody can offer a basic loan. What value added are you bringing to the table? You know, even with your own company, the degree to which consumers have always looked or made the choice from one person to another, one company to another, based on how much more value are you bringing to the table. And
Absolutely.
Right now, technology has blown that out of the water and made that much more possible. That just means banks, traditional banks and credit unions, have to expand their own thinking in terms of what it really means to be a bank in a post-pandemic digital world.
Well, I have to admit, I worked for Dean Witter back in the 80s when they were part of the Sears organization and the Sears Financial Network. You know, remember Hal Holbrook sadly just passed away, was the spokesperson, and they had Allstate Insurance and they had Coldwell Banker Real Estate as part of the platform. Unfortunately, we didn't have platforms then. Everything was kind of direct mail. But you know, that was an attempt. And you know, one thing I want to get back to, you know, you were talking about the Paycheck Protection Program, and that some organizations literally did it all by hand. We talked to a bank on Long Island. They went out and bought 100 PCs for their staff, and they figured out the procedures on conference room tables and worked it out for one client at a time. And others handled, brought in what you might say, what you've described, fintech resources or Salesforce resources, and were able to handle a much bigger volume of loans and reduce the processing time. Tell you, what were some of the things that you saw that worked out as far as resources that banks were able to reach out to help them with the Paycheck Protection Program?
Well, of course, I think in the industry these days, the story is well known about what Citizens Bank in Edmond was able to do, their partnership that allowed them not only to kind of streamline the process of getting the PPP, but actually then to take care of the forgiveness for the PPP loan, because that was one thing again that while some of the folks who did it all by hand and did it all the old-fashioned way, so to speak, then they also had to ramp up to try to help people navigate the forgiveness process. And so I think, you know, Jill down at Citizens in Edmond had really done an amazing job to partner, and I'm totally blanking on his name.
Well, you know, we
ahead.
found there was a story about a bank in New Jersey just over the George Washington Bridge from us. I think they were in Englewood, and they managed to process over 100,000 Paycheck Protection Loans. Small bank. I mean, it was it may have been literally a fintech, but they did 100,000 loans. I sent a friend to a nonprofit to them, and he said he got his paycheck payment in a couple of days. So
I think they also had kind of white labeled that out to some fintech partners that allowed them to amplify what system they had put into place to do that, if I'm not mistaken.
Yeah, that could very well be. Now, one of the things that you know, when we talk to community bankers, you know, we had a great talk with Bob Fisher last year at Tioga State Bank up in the Ithaca area, now the chair of the independent community bankers. And he said the customers have an expectation that you could do the same things as Chase and Citibank. And meeting that technology expectation is a real challenge for them. How do you advise community banks on being able to maintain a competitive online platform comparable to what they might see from a larger bank?
Well, one of the things that we're advising all of our customers these days, all of our clients, is that they have to keep in mind the degree to which consumer behavior has really shifted in this process. You know, the pandemic has ended up influencing perceptions about convenience, about health, about simplicity, and as you say, it's elevated the expectation of community banks to function more like the Chase and the Bank of America and some of the larger national banks. And so many times, I wish I had a dollar, honestly, for every time we had made recommendations to a client and said, I realize this is a big chunk for you. This is going to require a lot of capital. It's going to require a major investment, but without it, you're going to continue to lose market share. And sometimes it takes 6 months, a year, 2 years, 2.5 years before they're even ready to implement, and they lose all momentum. And that's why there's so much conversation, all these buzzwords, agility, etc., because in the industry, the smaller institutions aren't used to working that fast or making those kinds of financial commitments. The days when that kind of window period of time is past. You know, people cannot wait to make those kinds of digital investments because their consumers are expecting that kind of performance. People have too many choices right now. It's far too easy, especially when you've got a lot of smaller institutions now coming together. I expect we're going to see even more consolidation in the industry this year. And you're going to have some regional powerhouses that feel like community banks to their customers. But they're going to have all the digital tools that a customer expects, so they can do their banking on their terms 24/7.
Absolutely. And now I wanted to go back to a question. We talked a little bit about when Sears tried to offer insurance and real estate and credit card. Obviously, they had a huge credit card file and brokerage services. And we worked through the period of Graham Leach Bliley when Citibank tried to be able to better offer and other insurance products. Certainly, that's something CBSI was based on, is the ability to sell insurance products to banks. And then the other needs are things like retirement planning or saving for children's education. We used to say, on a Saturday morning, you go to a bank branch and it's going to be really busy. It's not that way anymore.
Right.
And boy, insurance agent would say, boy, that'd be a great place to sit and meet the people as they walked in the door. It's getting tough to find customers from bank branch traffic. How do you talk to your clients about being able to cross-sell insurance, other key financial needs through their community bank or credit union relationship?
Well, certainly one of the biggest things we're talking about all the time is you've got to get a handle on your customer data so you actually have a greater sense of that customer and what their needs are likely to be. You really can't cross-sell or upsell if you don't know who folks are. And unfortunately, a lot of institutions have been dragging their heels when it comes to managing their data house. And so many times the issue of siloed data is still something that so many financial institutions haven't tackled to the ground yet. And I think they're increasingly seeing this has to be a top priority for us because when you've got data about your customer over here on an Excel spreadsheet that's in a personal banker's office, and you've got data over here from your mortgage lender, and you've got data over here, you don't have this 360 view of who folks are, so it makes it difficult to sell. And as you say, when you extract people out of the branch, where really the only reason they're going to come in increasingly is going to be to solve problems or do something very complex, the last thing they want to experience is somebody trying to sell them something. So at least that's what consumers are telling us these days. People are, we've talked so long in the industry about being the trusted advisor to our customers. And unfortunately, the industry hasn't put as much effort into actually building that trust. Right now, consumers can go anywhere for information. They can go to the internet, they can go to an app, they can go to Credit Karma and actually look for advice faster than they will go to their bank, because their bank hasn't kind of established that relationship in digital space. It's great when you can walk in and talk to somebody in a branch, but if people aren't inclined to do that during those narrow business hours, and the only way you can talk to them is through digital channels, but your digital channels aren't giving people what they need in terms of advice or education, how can you expect them to turn to you for those issues? So one of the things we're also saying to our clients is look closely at how you're establishing that human connection in digital space. Are you actually meeting, advising, offering the kind of suggestions and education about other products that isn't just about selling a product? You've got to be more customer-centric, consumer-centric these days, but still too many people are making their choices based on what's good for the bank instead of what's good for the customer. There's got to be a mindset shift.
Well, you know, in the going back to the American Banker Digital Banking webinar a couple of weeks ago, numerous speakers talked about the importance of a good contact center so that the customer can call in when they've got a question or a problem that needs to be solved. And the backup still is the branch. People still like to go in and talk to someone in person about when something important comes up. Now, I don't want to let you go before I have a chance to ask you about something we talked in our warm-up that you really had interest in on the Independent Community Bankers Association Capitol Hill program. They had Senator Sherrod Brown speaking from the Senate Banking Committee, and one of his ideas, a very important one, is to give a banking relationship to 27 million Americans who don't have a bank account today. And he said he hoped community banks would participate in that. And then he said he hoped the United States Postal Service would get involved as you know, as an organization with distribution across every zip code in the United States. And I understand you wrote something on that. Tell us a little bit about your thought about implementing a banking capability to the U.S. Postal Service.
Well, it's interesting. Postal banking certainly has worked in other parts of the world, and there are so many reasons why it would not work, or it would be difficult to make it work in our country. One of the things that I wrote about, though, was the issue that people are so opposed to it, the concept of using the Postal Service in any way to meet the needs of consumers on that front, that you have the industry positioning itself in such a way where there's actually no dialogue going on right now. And if there was more conversation about, again, that's consumer centric, that says, okay, how can we actually meet the needs of those folks in rural America, especially, that you pull the branch out because it's no longer profitable, but there are folks that just aren't comfortable in digital space yet. What would it be like if you actually had the kind of partnership where a community bank could put an ITM in some rural post office branch that wouldn't be necessarily about the post office running the bank, but there's no innovation possible if you're at least not talking to one another. But instead, I see a lot of people just kind of putting their kind of stake in the ground and saying, this is no, you can't do this, you can do this. And they're not trying to find any compromise or middle ground in a way that's going to help people who need it.
Well, we always extend appreciation to letter carriers and the United States Postal Service delivering mail in all kinds of weather, from the winter storms to the summer heat to the spring rain. And you know, all of our banks that we work with at CBSI need the U.S. Postal Service to deliver statements, notifications, and you know, from time to time. And it's still a vital resource. And I think there's some merit, especially for rural parts of the country, where the Postal Service has a government mandate to deliver the mail. And there's a new strategic plan being discussed for the Postal Service, so we'll see what happens with that initiative. But Jim Perry, a delight to talk with you today. You're with Market Insights, and if you would, maybe finish up by just telling us about the services of your company.
Once again, we have worked with community banks and credit unions for over 25 years now, helping you look at your market data, your consumer data, in a way that's going to guide your strategy. The wonderful thing about being a consultant is it allows us to bring some outside perspective to issues that you may be dealing with, you know, internally for a long time. Sometimes being able to take the next step forward requires having a different set of eyes.
Absolutely. Well, Jim Perry, delight to talk with you from Market market insights, and we hope we can do this again. And I really appreciate hearing about the services of your company and your insight on the community banking industry. Great to talk with you today.
Thanks, Ken. I appreciate it.
Our pleasure. And again, CBSI Services, proud to recognize the work of our team taking care of our clients and their customers in the banking industry. We provide insurance-based benefits to the credit card and payments industry. So from my home office in White Plains, New York, this is Ken Kraetzer. Have a great day, everybody.